Hey guys, Casey Dim here, taxsaleacademy.com. Hey, listen, thanks so much for joining me today. So before we get started, as we wait for a few more people to join us, do you want to give you a few quick resources, just kind of more than anything, just to kill time while some other folks join us, that kind of stuff. If you do have any questions right off the bat, go ahead and drop them into the chat box. Be more than happy to answer them once we start getting to the questions, guys. So first off, if you're looking for tax sale investment resources, tax sale playbook, head on over to taxsaleacademy.com, get your copy. Again, the book is free, just covers shipping from our warehouse to your front door. What else resources? We got Tax Sale Podcast. You can join us at taxsalepodcast.com. Listen to us on the go. We've got a tax sale investing web class at taxsaleinvesting.com. We've also got a state guide. If you want a state-by-state color-coded map with all sorts of videos and little facts and that kind of stuff about how the different processes work in every single state, we've got that as well. You can go on over to taxsaleacademy.com and click on State Guide. And then, of course, if you want the most advanced information, we do have the Tax Sale Academy. Click on taxsaleacademy.com and click on Join, and you can get started. So those are a few little plugs, just kind of kill some time. I see we still have the numbers creeping up just a little bit with us. Hopefully we get a few more folks today. Now, guys, if you have any questions whatsoever, go ahead and drop them into the box, and we'll start answering some questions. Now, what I usually do in these question and answer sessions is I'll start with some questions that I've received over the past few weeks, questions that I've kind of pulled from either emails or Facebook or YouTube videos, that kind of stuff. So if I say your name, I'm not to embarrass you or anything else. I'm just kind of telling you that because I like your question, and I'm going to repeat it and give everybody else my answer because everybody can kind of learn from each other. So odds are, if you have a question, there's probably somebody that is either watching right now or might watch this video on the replay in the future that also has the same question. So feel free to drop those questions. And in the meantime, I'm going to go ahead and over the questions that we had received previously. So one of the questions we actually got a few days ago from on YouTube, actually a video, and the screen name or the username was freeworld227. And he asked, are there other things besides land and houses sold at tax sales? And the answer is yes. Basically, anything that has a tax bill is going to show up sooner or later at a tax sale auction. Now, the most common stuff is going to be probably vacant land and houses, without a doubt. I would say of those two, the large percentage is going to be vacant properties, just because that's the most common type properties, I guess, when you kind of look across the country, right? You have more vacant land than houses, right? Now, there's going to be residential stuff. That's going to be your primary selection at tax sale auctions, but I have seen lots and lots of crazy stuff. There is commercial stuff, commercial properties, like vacant lots. I've seen strip centers. I've seen lots of old grocery stores, lots of old gas stations. I've seen some really weird stuff like private schools that got shut down, didn't pay their taxes. I've seen churches. I've even seen hospitals. I've seen docks. I've seen condominiums. I've seen, and of course, all sorts of junk. I mean, landlocked properties, easements, all sorts of stuff. So if it has a tax bill, you are going to see it sooner or later at a tax sale auction, okay? So next question was from rblunt0721. He says, great video. If I thoroughly research every property I buy, specifically residential properties, what could I possibly be sued for? I'm going to my first auction next month. Should I start an LLC before I go? So this is actually a video I posted, I think last week, the week before, and we were comparing holding properties in your personal name versus holding properties in an LLC. And the video itself, although that wasn't my intention, the video, of course, kind of skewed to holding properties in an LLC. Now, there's all sorts of different ways to hold properties and different entities and stuff. And obviously, this is something you want to run by your CPA and financial planner and attorney and all that good stuff. There's my legal disclaimer. Of course, I recommend an LLC because that's what I personally use. I actually use multiple LLCs. He was asking, why put in an LLC if I research everything and know exactly what I'm buying? Why not just put it in my personal name? There's a lot of reasons. Number one, if somebody walks in that house and breaks their leg or they trespass, they're going to sue you personally, even though they shouldn't have been there, right? I mean, there's pretty much all the stuff I'm about to name, there's insurances for, but insurances don't come without expenses, and even still, you might have to defend yourself. But I mean, I've literally seen walls that have fallen off tax defaulted real estate into the road. I've seen houses fall down. I've seen houses catch on fire and catch the other structures around it on fire as well? Or perhaps what if you maybe just forgot to pay your taxes, or you forgot to pay your water bill, and then 5 years down the road you get sued by the city for that water bill that you forgot because they started digging up old records, and then they sue you instead of suing your company. That can cause all sorts of issues when you go for maybe a loan or something, when you have a judgment against you personally. So there's all sorts of issues with holding a piece of property in your personal name. Maybe you could even sell a property to somebody. You think everything's good. A year goes by and they say, well, you didn't tell us about this, and they sue you personally, and then you have to defend yourself personally. So there's all sorts of issues with holding a piece of property in your personal name. I've done it in the past. I've especially when I was early in this business, but I was kind of it was a gamble. So the next part of his question was, I'm going to my first auction next month. Should I start an LLC before I go? Yes, if your professional advice around you recommends it, definitely do an LLC, S corp, something. Obviously it costs money to do that, so take that in consideration. But if you strongly feel like you're gonna be able to buy something, then it's worth consideration. Let's see. Saw one question, a couple of questions pop up. Let's see. Ben Ken says, "Hello, can we buy and sell land and houses remotely, or do we need to be active in the field?" You can definitely do it remotely. The preferred method, of course, is to be able to, drive there, see it with your two eyes, in person, all that good stuff, right? Go and inspect it. If you can do that, by all means, do it. Now, I'd never suggest that you buy anything completely sight unseen. Get some sort of trusted advisor if you can. Maybe you hire a realtor, pay them. Maybe you hire a scout or a building inspector, somebody to help you out, be your eyes and your ears in the field and tell you exactly. But you're putting a lot of trust in those folks that you might or might not know. So just take that in consideration, that when you do invest remotely, you have to realize if you don't see it with your own two eyes, number one, somebody has to put eyes and their eyes on that property. And number two, you're really putting a lot of trust in those folks. So just kind of take that in consideration. So obviously you don't want to spend your life savings on something that some guy you found off Google tells you is in good condition, right? So just kind of take that in consideration, but you can absolutely do it remotely. There's all sorts of ways to hire scouts, hire people to take care of it, to remodel it. A lot of the properties, I would say a good percentage of the properties, probably over 89% of the properties that I buy are not in the state that I live in, and I live in a great state for tax investing. It's just, it's kind of the selection, and I kind of try to cherry pick the best properties. So hope that answered your question. AB, I guess it looks like I guys can bend the question, but I'll answer as well. Can a novice really do this? I'm trusting you and need your guidance. In my opinion, absolutely you can. That's the reason I'm here. That's the reason I exist. I've got hundreds of videos on YouTube. There's a lot to tax sale investing. It's not just something where you walk in and you say, I'm gonna buy this piece of property. You walk out, you sell it next week and make $100,000. It's not quite that easy. And the problem is a lot of people try to make it seem like it's very, very, very easy. In theory, it is. You're buying tax foreclosed real estate down here, you're selling for up here, and you're making this much money. But there's a lot of steps, a lot of processes in the middle. I've seen beginners do it time and time again. That's the business that I'm in. I've seen beginners do it, and I know it can absolutely be done if you follow the correct system, if you follow the correct process. If you just take the time to learn what you're doing. Don't just go at it blindly, throw some money into the air and hope it sticks to a good tax sale property, because you're gonna make a mistake if you do that. Just learn what you're doing, take your time, be patient, don't rush into it. Again, I cannot emphasize enough to learn what you're doing, AB. Margaret didn't get that one. Let's see, Arblant. What state is the foreclosure process the easiest? If you go to, let's see, I'm trying to think the best resource for you. There's a lot of states that it's just a matter of finding a piece of paper. If you're buying a tax lien, then once the redemption period expires, you can literally just sign off a piece of paper and send it, give it to the clerk or give it to the registrar of deeds or the tax collector, whoever handles it in the area. There's a lot of areas like that. I'm trying, off the top of my head, I'm trying to think the best resource, probably the state guide. I think on some of those videos, it might say it might tell you, if you click on the tax lien states, I believe it tells you about the foreclosure process. If not, it'll reference the statute, and you might have to do a little bit of digging and stuff. If you can't really find a whole lot of information, let me know. Go to taxalchemy.com/contact or contact-us, and send me an email, and it's something I can definitely help look up for you. But there's a lot of states that are going to be fairly easy. Let's see. Get back to a couple of pre-recorded questions. Ms. Jones says, this is a video about quiet title suits. So if you're not familiar with a quiet title suit, a quiet title is a way to clear the clouds off of a tax defaulted piece of real estate. That way you can get title insurance and sell it for full market value. So Ms. Jones says, can you please tell me how to file a quiet title myself without having to use a lawsuit? Thank you in advance. It'd also be great if you can do a YouTube video on quiet title, how to do it yourself. And my response to her is kind of going to be my response to you guys. First off, if you want to do it yourself, don't ever go and do it straight out, from scratch by yourself and try to figure it out, right? First, do the very first one by hiring an attorney and kind of follow what they do. Shadow them, ask questions, that kind of stuff. Probe as much as you can, and then potentially try to do it yourself, if that's the route you want to go. I actually don't recommend it. Just pay the attorney, let them deal with it, because at the end of the day, if somebody challenges that suit to quiet title, it's going to be you versus probably whoever challenges that suit to quiet title's attorney. Or, at the very least, there's a good chance you might have to show up at court and just explain to the judge why they should go ahead and clear the title. And they don't, they're going to hold you and an attorney to the very same standard. They're going to want you to know every single law that's applicable. They're going to want you to be able to quote, whatever you need to quote as if you're an attorney. So try to file a suit to quiet title yourself. It's going to take a lot of time, and there's a lot of the expense involved in a suit to quiet title is really going to be in the filing fees and stuff like that. So, as far when it comes down to it, you're still going to have those, whether you file it yourself or you hire an attorney to file it. So just take that in mind. I've got a few live questions pop up. Let's see. Julianne, what can I do if I purchase a house and it has a mortgage on it? It depends on the state that you're in. Most states are going to wipe out the mortgage as long as that mortgage holder was properly notified during the tax foreclosure process. If that mortgage holder did not get that notice, it's going to kind of be between you and the mortgage. You might have to reopen the tax foreclosure case. It's definitely something that you're going to want to get an attorney involved in, unfortunately. But in a lot of states, as long as they were properly served notice, that mortgage is going to be gone. So hopefully that helped you out. Mark Jordan, are there any states with a collection of OTC property similar to Michigan? I'm trying to. Yeah, there's quite a few states that have a lot of properties. Yeah, I mean, Arkansas has, they have thousands of properties, for example. There's a lot of places that have OTC properties available. Arkansas is one of the biggest ones. Michigan does have a lot. I think they actually call them, I think they call theirs surplus or something like that, the ones that are sold after the second no reserve round. As with all OTC properties, of course, be very, very careful and be extra diligent to make sure you're doing the right research, because especially like in Michigan where they have, 2 sales, it went through one sale at a minimum bid, nobody bid on it, and then went through the second sale, the no reserve auction, nobody bid on it, and now it's still surplus. So be careful. I know a lot of stuff in Michigan is going to be the HOA stuff or the stuff that has moist soils and that kind of stuff, so be careful. But yeah, I think Arkansas is another one that has, if you go to, I believe it's COSL, stands for commissionerstatelands.org. They have a list. You can go county by county and look through all those. It's going to take some digging though. The best way to purchase stuff OTC is as soon as it hits that OTC list, figure out how to buy it, and do your research as fast as it hits that list, because there's other people doing research. So if it's just on that OTC list for 3, 4, 5 years, it didn't sell at auction and it hasn't sold for 3, 4, 5 years, so there's probably something wrong with it. So get the very fresh OTC properties, if that makes sense, I guess. Let's see. Frank says, Casey, I'm also interested in the tax sale overage businesses. Do you cover any material in this? I actually don't cover too much in detail inside the academy. I think I got a video or 2 here on YouTube. It's not really what I specialize in. And there's depending on the state and stuff, there's a lot of law changes that have happened recently. Some will require attorneys now. Some will cap you at certain percentages. It's not something that I do on a very, very regular basis. And so I don't know the exact, I can't really give you the best direction for that. I'm probably not the best person to ask for that. There's definitely opportunity there if you approach it the correct way. It's just, it can be very difficult, and you have to really make sure you understand the statutes before you start wasting time contacting former owners and stuff like that. So just make sure you really dig in and read through those statutes, and make sure they're the most updated statutes as well. Because again, I know for a fact a few states have changed stuff recently, requiring attorneys or requiring affidavits, or I know some states actually require either the owner or the owner's attorney to get it for you. They can't have a third party, and there's other ways around it. There's certain ways to assign interest and stuff like that. I don't talk about that stuff just because I don't do it. I'm so busy with just buying and selling tax sale properties. But hopefully that helps you out, Frank. I'm sorry I couldn't give you a better question or a better answer for your question. Jerry says, do I have to get the tax deed first before I insure the property if I'm winning? If I'm the winning? Okay, so you're talking about homeowners insurance, that kind of stuff. It depends on the homeowners insurance company. As far as insuring a tax deed property, the best recommendation I have is to get a local, maybe 2 or 3 local insurance brokers. As soon as you buy that property, call them, say, hey, I bought a piece of property, it's foreclosed, I got it basically at the courthouse. Here's the parcel number, here's the address, here's what it is. How fast can you insure it for me? And kind of ask them and see what they'll do. A lot of times, until the property's in your name or until it's recorded or something like that, they might not be able to give you insurance, but they might maybe they can suggest like an umbrella type policy, or a vacant property policy that goes into effect a little bit early, maybe upon receipt of your funds or something like that. So call your local insurance companies, see what you can work out with them. Everybody's just a little bit different. Every state's a little bit different. Everybody has different regulations and stuff like that they have to follow. So hopefully that answered your question, Jerry. But yeah, definitely if you have a piece of property that's worth insuring, do it. Make that phone call immediately, really as quickly as you can, to an insurance agent, and get that lined up and get it in place as fast as possible. It's really going to be a worthwhile investment if you have a $500 insurance policy or $800 or whatever it might be in your area. That's going to go a long ways, even if you only pay $20,000 or $30,000 for the property, because tax defaulted real estate kind of has a habit of catching on fire or having issues and stuff like that, just because you have a lot of people that are upset and grumpy about the tax foreclosure law. So just kind of remember that, okay? Let's see. Tony, if I own a tax deed property for 4 years, can I transfer the deed into a warranty deed without having to go through quiet title action? Tony, that's going to be a question for a title insurance company near you, in your area. In some states, what you're talking about is the former owner's rights, the statute of limitations for anybody to raise a lawsuit or to raise question to that tax foreclosure that clouded that title expires after a certain period of time. Now, in some states, depending on how the law is written, once that expires, the title is perfectly clear. In other states, it's still just a little bit clouded. But again, I'm not the person that writes the title insurance company, the title insurance policies. That is a question for the title insurance companies. The best way to do, pick up the phone, call a few title companies, or call a few real estate attorneys in your area. And you don't have to talk to a closer or receptionist, anything like that. You don't have to talk to a closer or an attorney. Talk to just receptionist. Say, I've got a tax deed property. Can you tell me how long I need to hold it before you can insure it for me? Because they'll be the people that actually issue that policy against it, and they'll be the people that can give you that answer. And of course, that answer might vary from whether you're at Alta or First American or Stewart or wherever you're at. So take that in consideration too. That just because the state statute says one thing, the insurance companies still might want maybe another year or 2 buffer, that kind of stuff, just kind of to make sure. So that's a question for the title insurance company. Just call them, and if they don't answer, just call somebody else. There's so many title companies right now, in the business. So they'll be more than happy to help you in most cases. Let's see. Jerome, good evening to you. Let's see, Julianne, how different is an HOA foreclosure than a tax deed foreclosure? And do you actually get the property when you win the bid? It depends on the state. And I'm not an expert in HOA foreclosures. I can tell you that an HOA lien is typically going to be junior to a lot of other stuff, including your tax foreclosure and a lot of times your mortgages. So what happens, and I'll give you an example like in the state of Florida. So if you have an HOA, and you have a piece of property that has a mortgage on it, that HOA forecloses on that property because you did not pay your HOA dues, that mortgage still exists. So basically that HOA is down here, the junior lien, and the mortgage is going to be your senior lien. Same thing with a tax lien, or I'm sorry, a tax deed or tax foreclosure. That HOA lien, that HOA foreclosure is always going to be kind of at the bottom of the barrel. Obviously there's stuff they can do to force them out and that kind of stuff. I'm not the expert when it comes to HOA stuff. I've made some investments into HOA foreclosure type properties that was very, very strategic. But buying an HOA foreclosure, depending on your state statute, it very well could be a waste of money. So let's see. Got a few other questions that we had previously. Let's see. Mikey T2. Can you buy properties before the auction? This is actually very popular lately. Yes, you definitely can buy properties before auction. So basically and I think what he's getting at in the question that he'd asked on YouTube was if you see that tax foreclosure list and there's going to be competition at the auction, can you sneak in there and buy that property? And the answer is absolutely yes. Now, I'm going to look at it from two different strategies for you guys. The first way is you can go and you can send them postcards. You can do mailers. You can knock on doors. You can find them on Facebook. If you can find these people, number one, you're going to be a leg up on a lot of other people, because most people that know they're going to be tax foreclosed, they don't want to talk to really anybody. So if you can find these people, be nice to them, work out some sort of deal with them, that kind of stuff, you can definitely save yourself from some competition at the tax deed sale. Just take into consideration that until that sale happens, every other lien is still outstanding. So if there's any mortgages, any mechanics liens and stuff like that, all that stuff's outstanding. So make sure that you have enough, that you're paying them enough money to compensate them, plus you're paying the taxes, plus you're paying for any outstanding liens, and probably you're going to have to be responsible for the closing cost as well. And speaking of that, you need to go through a title insurance company every time you purchase a piece of property before the tax sale. That way, that title is still insurable. You don't have to worry about a suit and quiet title or anything like that. So, the deal is you have to, let's see. Sorry about that, just hiding a couple comments. All right, so, and the deal is that if you do buy a piece of property, before the tax sale, it's going to be insurable. So if you buy it after, you have to go through a quiet title, all that good stuff, and you don't want to do that, obviously, because it's going to cost money and time. So just kind of keep that into consideration, guys. All right, let's see. That's actually Jermon. Great question. Let's see. My comments are scrolling around on me. What's the best verbiage to use when cold calling tax delinquent homeowners before the property goes to auction? So I don't really use a script. I really don't use a script on anything. I kind of just use some bullet points. Like, I kind of tell them who I am in a very, very friendly, very, very quick manner, because if you call somebody and say, hey, I'm Casey Dimon, I'm a tax sale investor, a lot of times when they hear tax sale, boom, they don't want to talk to you anymore. So I usually say hey, I'm Casey Dimon. I'm in real estate, and I notice your property, you're in a situation with your property where you might be losing it to a tax sale soon. I'm just trying to help you out. So you always need to take the very, very sensitive type approach. Like, you're the person, and I almost hate saying this, but you almost have to be like their hero. You have to be the person that steps in and kind of like saves the day. And, how can I help you out of your situation? So what I want to do is I can help you out of your situation where you won't have the tax foreclosure. The actual, your name is not going to be plastered everywhere as going to the tax foreclosure, that kind of stuff. It might have a tax lien, but we'll clear that up for you. We'll take care of all your other liens or encumbrances, hopefully, depending on how many there are. And we'll also hopefully put some money in your pocket. If you wait and you go through the tax sale, you're probably not going to get any money, and somebody might come in here and kick you out, that kind of stuff, if it's the house, of course. So always put yourself in the best light as possible, that you are trying to help them out. Give them some money to put in their pocket, help them move on. And, typically the best way I do it too is if it's a house, and I'm not going to force you out. The sheriff's not going to be out there the day after the auction to get you out. If you need a week, 2 weeks, 3 weeks, whatever, let's go ahead and we'll work with you, and we can get you, you move on to the next place, get you settled in somewhere else. But the first sentence is, I'm Casey Dimon. I'm a real estate, I'm in real estate, and I heard there's a situation with your house. So just kind of get the conversation going. And however you can do that, that's great. The more that they talk, the more rapport you build up right off the bat. That's the best way to do it. And I always try to do that, build rapport, do everything you can. I want to help you, I want to help you, I want to help you before you actually start talking numbers and stuff like that. So hopefully that helped you. So let's see. Yeah, absolutely. Perfect. Let's see. Matthew had a previous question. Matthew Rowe 884. Sounds like a fun deal. Single hardest thing, question mark, right to the point. Single hardest thing is basically to kind of just learn the different systems. There's thousands of counties around, and even though you have the states that follow these laws, everybody has different systems just a little bit as far as how they do stuff. And then inside of that, it's difficult when you have to research the properties, because number one, you have to understand and know what you're looking for. You have to have processes and the systems to figure out exactly what you're looking for so you don't get yourself in trouble. But number two, every county has a different GIS system, a different building department website, different property appraiser's website. So everything is just a little bit Greek until you figure it out. But that's kind of the hardest thing, is understanding the systems and the processes, and then researching and knowing what you're looking for. I guess kind of learning it from the very ground up is the hardest thing, Matthew. Let's see. Mark John, you offer an ebook version of the tax sale playbook. I don't offer an ebook version. Truthfully, the reason I found is I used to have it was called the tax sale blueprint. And I did that. I did a lot of tracking information on that and stuff. And I found that when I was just sending it out to people who ever wanted it, it hardly ever got read. So I've got this, and I'm getting a lot of feedback, almost, and I can almost assure this gets read a lot more than when I was doing the ebooks and that kind of stuff. So you can get an audiobook when you purchase this. This is the book is free. It's $4.97 for this, and that just covers shipping. And truthfully, that doesn't even cover shipping by the time you factor in, the labels and all that good stuff. So, but when you buy this, you can actually get the audiobook, and you can download that right away. If you're looking for information right now, like tonight, you can download the audiobook as well. So hopefully that helps you out. Ben said, would it be better just focus on buying and sell a vacant lot land instead of structures? Great question. And that, yes, truthfully, it is, especially when you're starting out, or especially when you're investing remotely. A good portion of what I do is vacant stuff. I do a lot of structures, but a good portion of what I do is going to be the vacant stuff, vacant lots. I mean, it's not the most exciting stuff, right? It's not like, oh, I went out and bought this huge apartment building or this huge whatever at the tax sale. It's like I bought a quarter-acre lot, right? It's not exciting, but it's the stuff that is going to help your business to grow. And it's really kind of what catapulted my business, is buying and selling lots, buying and selling small acreage pieces and that kind of stuff. But yeah, it is definitely worthwhile to focus on that stuff, because a lot of people will overlook it as well. I've been to auctions before where there's been 30 bidders on every single house and 2 bidders on the lots. So it's a good way to limit competition too, because the structures really draw a lot of attention. Now, I'm not saying don't buy houses or anything like that. If the opportunity is there, take it. But lots, vacant land can be a gold mine that a lot of other people will overlook. Let's see. Randolph said, how do you protect yourself when buying directly from the homeowner? So basically, when you're buying directly from the homeowner, like a pre-auction type deal, to me, it's going to be a completely standard real estate transaction on the open market, arm's length, that kind of stuff. I'm going to have a real estate contract drawn up. I'm going to send that contract to a title company or a real estate attorney. They're going to do a title search. They're going to do a lien search. They're going to do everything. They're going to prepare all the documents themselves. The deed's going to be prepared, all that good stuff. The funds are going to go to that attorney or that closing company, just like a normal transaction. And then, the seller's going to go there and sign it. They're going to get the funds from the closing company or the attorney, and, they're going to transfer the deed and everything's going to be done. Meanwhile, the closing company will take care of the taxes, any payoffs of mortgages, liens, that kind of stuff. So when I deal directly with a homeowner, it's going to be just like a conventional standard real estate transaction, as if you're going through a realtor or anybody else. That way we get title insurance. That way everything's done kosher. We don't have to worry about anything. So, let's see. All right, guys, got a few more pre-printed questions, and saw a few live questions pop up. Let's see. I do have a note here, guys, and if you ever know, I don't plug stuff nonstop, but Tax Sale Podcast. If you do enjoy listening to podcasts, go to taxsalepodcast.com. There's a link down below. I started about 6 or 8 months ago. I post actually 2 episodes a week now on Tax Sale Podcast. So if you listen to podcasts, at the gym, on your way to work, that kind of stuff. Download us on your favorite podcasting platform. Make sure you like us as well, because we really appreciate that kind of stuff. And then, of course, Tax Sale Playbook too. So let's get back to the questions. Charisma Jackson, first step to get started. Your first step to get started is to learn. One great place to learn, of course, is going to be Tax Sale Academy on my YouTube channel. But go to the county's website, read their frequently asked questions, read their rules, their process, their procedures. Go directly to the counties, multiple counties, and see how they operate, see how they do stuff. So that's a great way to start. That's a free resource. I mean, it's a government website. Read through it and just kind of discover how they do stuff. Charisma. Let's see. Ben, what is the average return on investment when buying and selling vacant lots or land? Also, what is the average time frame for buying and selling vacant lot and land? It depends. I mean, honestly, I would love to be able to give you an accurate answer, but it really just depends. I'm trying to think here. I'm about to do the video next week on one of my first. I think the title's gonna be like my first big auction or something. It's back in 2004. I was actually looking at that stuff, and on some of that stuff, I did it phenomenal. I mean, it went from like 2,000 to like 18,000 or something like that, right? But if you can double, triple your money, that kind of thing, move on very quickly, that's kind of going to be the way to do it. There's different ways to sell properties very quickly. A great way is a buyer's list, kind of get repeat buyers, sell it to other investors. So you get in, your margin might be a little bit smaller, but you can get out very, very quickly. Move on to the next one, keep snowballing that capital, that profit. But if it's just an open market type sale, it's going to depend on the demand in your area. If they're building in that area, it'll go very, very quickly. I had a member, and I don't know if she's actually on tonight or not, but Joan, I think she was in North Carolina. She bought a lot at a tax list back in November, December. And I want to say she paid around $7,000 or $8,000, sold it in about 5 weeks. I think she paid she got $18,000 or $19,000 minus some expenses and stuff. So she had a great return, and that was an area where there was a nice neighborhood. They're doing a little bit of building there, that kind of stuff. But if you go to an area out in the middle of Arizona where there's absolutely no building, there's desert or something, obviously it's going to take you a while to sell it. So it kind of depends on the area. Yoshika, hey, do you ever close in-house? Yeah, if I'm selling properties, I will. And what she's meaning by closing in-house is do I ever prepare the deeds, that kind of stuff myself? I do, absolutely. If it's a piece of property, especially the low dollar stuff where I'm not offering title insurance, it's an as-is sale, title comes clouded, all that good stuff, I will do it in-house. Obviously provided that the buyer is comfortable with it. If they're not comfortable with it, we'll go to an attorney. But I do prepare deeds, all that good stuff for the lower dollar stuff where it's just not. Where it's cost prohibitive to kind of use an attorney unless somebody else is paying for it. Mark Jordan, would you recommend waiting to buy vacant lots at a live auction versus OTC or surplus property for first purchase? Great question. It just kind of depends. My suggestion to you is look at the OTC list. Kind of really dig through that OTC list and figure out or that OTC surplus, same thing, dig through that list, find out exactly what's on there, if there's any valuable properties on there. Because, first of all, the way I look at it, you have all this real estate, they all have tax bills, you have these specific properties where the taxes aren't getting paid. Some of those properties have the taxes that go unpaid for a reason, because the property's junk. If they go through the auction, nobody wants them there either, then they make it to the OTC or the surplus list, so they might be, might really be junk because the owner didn't pay and nobody bid on them. So if you see an OTC or surplus list, really, really, really dig into it. The odds are when you compare that list to a live auction, the live auction is definitely going to have probably, when you're talking averages, probably better properties than that OTC list. So you will have more quality properties. There'll be a better chance for you probably to do better at a live auction. But the OTC list is going to be immediately, you know what you're paying, you don't have to bid, that kind of stuff. So it kind of weighs pros and cons. Look at the OTC list, see what's available, and then kind of go from there. Hopefully that helped you out, Mark. CEO 268, what's the cheapest way to do a quiet title? I mentioned this earlier, you can do it yourself, I don't recommend it. My best suggestion is to get on the phone and start calling around. And call a bunch of attorneys, do a little bit of price shopping, figure out who's the cheapest in town or maybe even the state. From there, if you can go to an auction, hang out after that auction and talk to the guys that are buying the properties and say, listen, I'm, this is my name. Be very, very friendly, because you're going to eventually ask them for advice. Here's my name. It's so nice to meet you. You got a great deal on this kind of thing, whatever, however you can do to be nice to them. And then ask them, listen, I needed some suit and quiet titles, dude. Can you refer me to somebody? Because typically the guys that the most experienced tax sale investors in that room are going to be using, the attorneys that they use, are going to give you the cheapest. And if you say so-and-so real estate investor that I met at the tax sale auction referred me, you're probably going to get a good rate. And it's probably going to be better than just picking up the phone and calling around. But again, start with calling around just so you have some sort of idea, some sort of ballpark figure. That way, when you're talking to another investor, when you're at the auction is going to be the best place to get a referral for an attorney that will do cheap, quiet title suits. That's where I get all my referrals from, so, as far as finding those attorneys. So if you can't attend an auction or anything like that, truthfully, you might want to take the time to dig up who the biggest tax sale investors are in your county and reach out to them however you can to ask them who they use for their suited quiet titles. Because most realtors aren't going to know. Truthfully, most real estate attorneys, unless they're familiar with suited quiet titles or they do them, are going to be so pricey, it's crazy. So ask around, get some referrals. That's the best way to get it done cheap. That was CEO 268. Tony G, what type of lien survive a tax deed auction? Okay, so generally speaking, I can tell you that the majority of liens are going to be wiped out. So with that in mind, read your state statutes. Generally speaking, you will have IRS liens. The feds always are going to be above the state. Most of the time, those liens will expire after the 120-day redemption period, and it's not that big of a deal. But take into consideration, usually city and county liens will still exist. Now, you might be able to negotiate with them and that kind of stuff, but city and county liens are going to still exist. So any governmental lien will usually exist in most states. With that said, a good portion of properties, you don't have to worry about any of that stuff because it's all gonna be private liens. It will still help you to make a few phone calls and do all that kind of stuff. So just kind of take that into consideration. But as a blanket statement, I can say that most liens are wiped out, but check your state statutes. Every state's just a little bit different. Read that language. TaxSaleAcademy.com, click on State Guide, or actually go TaxSaleAcademy. Actually, there's a link down below. Click on that right now, or later on. And at the end of that video, it'll say, the laws were referenced from this, this statute or whatever. Google that statute, read through it. It's going to be very boring stuff. I got books right here on it, but read through it and figure out exactly what it says about other liens. Figure out what's more senior and that kind of stuff. But typically, most liens are wiped out unless they're governmental liens. Let's see. AD, if you buy a vacant land at a deep discount, can you use that as collateral at fair market value for another property you want to finance? Great question. That is going to be a good question for the bank. But if you buy it at a deep discount, the bank typically will not care what you paid for it. Now, some might have seasoning requirements and stuff like that. You might have to own it for so long, 6 months or a year, before they actually start lending against it, that kind of stuff. But usually, you can use it as collateral at fair market value, and they won't pay any. They'll really be focused on the appraised value of that property, whatever it appraises at through their appraiser, and they won't be focused on what you paid for it. But again, there might be seasoning requirements and stuff like that. Check with your bank. But yeah, you can definitely, and I've actually got friends that do this. What they do is they'll, might buy a bank-owned house that they pay cash for, put some money into, or there might be a tax foreclosure that they have to pay cash for, of course, through the county, put some money into it, fix it up, and then they go and they refinance it to pull that cash out. And when they refinance it, it's gonna be worth a lot more than what they paid plus any improvements. So yeah, you definitely can take fair market value out, kind of a cash out refi. Julianne, what's the best website to use to bid on tax deed foreclosure online? Real Auction is going to be a popular one, but typically the best place that I can suggest is figure out the state that you want to invest in, whether it's local to you or maybe it's a state that you have contacts in that can help you look at some properties remotely, or whatever. Maybe figure out your state first, then go to the county, and then figure out exactly how they auction them off. It looks like you just said Florida. I think it was Florida. Yeah. Somewhere it popped up. So yeah, go directly to the county clerk of the court website. In Florida, the clerk of the court will handle it. Go to, if it's I don't know, let's see, Miami-Dade County Clerk of the Court, right? Go there, click on tax deeds, and it will redirect you to their portal on the online tax deed site that you can register and bid and all that good stuff. Now, there's some counties in Florida that use private systems, so there's not like one blanket system that everybody uses. There's a couple of common ones in Florida, but go to whatever county you're looking for, go to their clerk of the circuit court, click on tax deeds, and then it'll redirect you to their specific auction site. So hopefully that helps you some. And of course, there are still a lot of counties that don't sell online yet in Florida for whatever reason. The Virginia farmer said, "How many states do you buy in?" Over the years, I've bought in just about a dozen different states. And it kind of goes up and down depending on what's available in one. If I do good in one, I'll put a lot of money here, but it'll go, if this state doesn't do very well, I'll go to another state. So we'll kind of move around. And then, of course, there are some laws that change from time to time that affect where we invest in. So, yeah, but definitely invested in quite a few states. Let's see. I had some pre-written questions from YouTube and Facebook. This is actually from Facebook. Eric says, "Can I flip a property before a suit to quiet title is done?" You can definitely flip a property before a suit to quiet title is done, but you cannot get title insurance, which means you will not get full market value, and you should never use a warranty deed unless you have title insurance. So you can sell it, as I was talking earlier. I think it was Yushik or somebody asked me, do I do closings in-house? Yeah, I do. I will, if it's a piece of property that's not worth a whole lot, I'll flip it. The title's gonna be as is. I'll give them a quick claim deed, no insurance or anything else, right? You can flip it right away, no problem with that. But you're not gonna have title insurance unless you do that suit to quiet title or the tax foreclosure certification process that will allow you to insure those titles. So you can flip it right away, but you can't get max value until you clear that title. Jess Lou 00 on YouTube, it looks like a couple days ago, says, "Won't you still have to wait 6 months to take possession of the property?" And basically, so guys, a lot of people think you have to wait a certain period of time to take possession or to resell a property, that kind of stuff. And in some states, you absolutely do. So if you buy a tax deed, for example, in like Texas, you have to wait a minimum of 6 months before you take possession or before you actually resell that property, because it's a redeemable deed. They have 6 months to redeem that deed, okay? So check on your specific states. There's a button down below that'll take you to the state guide, and it'll kind of clue you in on the redemption periods and that kind of stuff, whether it's 6 months, 2 years, 12 months, whatever it is. So every state's a little bit different. And that's one thing to really understand, that tax investing in general is somebody didn't pay their taxes, they lose it to a lien or a deed, and then the tax sale investor either owns that lien and they earn interest, or they own that property when they buy that tax deed. That's it in a nutshell. But all the redemption periods, the rates, all the technicalities, what liens exist, what don't, all that good stuff, that's going to be in your state statutes, and it's so important to read through that stuff. As boring as it might seem, it is so helpful because every state is just a little bit different. Had somebody else, Pookie RO. How do you find these no reserve auctions? Website, local ad, etc. And how can I know if my current state has them? So she left a video, this question on a video that I made a number of years ago. I think the title was $20 House or something, right? It was a deal that right place, right time type situation, but it was a no reserve auction. Some states, what they'll do is I was talking to somebody earlier, the guy that was in Michigan. I'm sorry, I don't remember your name, but we're talking earlier. So like Michigan, for example, they'll do the first auction will be typically the amount of the back due taxes, interest, penalties, fees, that kind of stuff. If they don't sell it, if nobody bids on it, they'll drop it to a no reserve auction. That no reserve might be $100, $500, whatever the county decides to do. So they'll have that no reserve auction where basically they're selling it for less than what they are owed. Now that's how Michigan does it. Some states does it the same way, but it might take time. They might initially start right here, and after a year they try to re-auction it for a cheaper amount. They keep going down every year until they eventually sell that property. So again, check on your specific state. I hate to keep saying that, but it's tax law investing. The laws, the customs in your specific state can really be impactful for you as an investor. All right, guys, I've got a few more questions. Looks like I got 3 more of the questions that I don't know, 5 or 6 actually. Mr. Lester via email says, what's a good amount for cash for keys? So cash for keys basically is where you have somebody occupying your property, and instead of getting a sheriff out there and evicting them and hoping that they don't come back after you later on, which is never going to be fun, you basically say, hey, here's some money. Will you please leave the premises, by tomorrow or by the next day or whatever else, in exchange for this money to help get you on your way. That's what cash for keys is. Cash for keys, as far as the amount, it can really vary. I would say no more than $500, $800 at the very, very max. But usually you get away with like $200, $300, $400, just depending on the situation, the house. And I always say, hey, if I meet them, if they call me or something, I'll probe a little bit. I say, what kind of condition is there? Is there any broken windows? Is there, I'm curious about it because my company bought the house and they're going to want to know. And what I'm doing is I'm asking them what kind of damages are on the property right now. And then I say at the very end of the conversation, okay, how about this? If the property it stays in that same condition, we'll give you $300, when we meet you out there to make sure you're out, we'll give you $300. That we can help you get you on your way. You look like the good guy, and you're really doing them a service to help move them on to the next property, move them on, to the next house or whatever. And of course, they're losing their house, so be very sensitive to them. So you're really helping them out, but you're also helping yourself out because if they go out and bust every window, if they lie to match stuff like that, that $300 can really go a long way, or $500 or whatever you need to be. Kind of play it by ear. Julian, if I purchase a home in foreclosure for less and it's worth a lot more, can I take out a loan against the property to reinvest in tax deed? Yeah, definitely. You can, if you purchase, it looks like maybe you're talking bank foreclosure or something like that. If you really any foreclosure, if you buy any foreclosure, as long as you clear the title up, if it's a tax deed, for instance, you'd have to clear the title up. The title has to be cleared, and then you go to your bank, refinance it, pull cash out, and reinvest it. People do it all the time. It's a great way. You can even do it like a line of credit, perhaps, against a house or against multiple houses. You can get like a commercial line of credit. And then what will happen in a situation like that is you might have $100,000 worth of a line of credit. You spend that when you find a good tax deed or tax lien or however you want to invest it. And if you don't, it's not cost you money until you start drawing from that line of credit. That's a way a lot of people do it, especially if you have multiple properties. Now, obviously, these don't want to be properties that you're trying to sell. You don't want to have land. You don't want to pay expenses and everything else for a piece of property that you're going to sell in 2 months because the expenses are going to outweigh, the value of that money that you're going to have in those 1 or 2 months, until you sell that property. So kind of consider probably doing that on more long-term type stuff. And also, as I mentioned earlier, there might be seasoning requirements depending on your specific bank, and they're probably they're going to tell you it's going to depend on the property and the credit, all that good stuff, of course. But just ask them if you have to own the property for a certain period of time before you can refinance it. Let's see. Guys, if you have any more questions, go ahead and please pop them in the box for me. I'd be happy to answer them. I've got a few more questions that came in the past week or so. Tom says, I got a long question here. Tom says, hello, just a question. I hold a tax certificate in Florida for 2 years and now trying to process the tax foreclosure sale. Can I actually bid against other bidders at the sale and try to own it free and clear? For example, my tax certificate is worth 10. If somebody bids 15, will I get the extra 5,000 with the 18%, or will the county get it? Okay, so kind of to recap his question. So in the state of Florida is a hybrid state. They first sell a tax lien, and after 2 years, you can take that to a tax deed. The tax lien holder, if they are not paid, has the ability to basically pass over a piece of paper, and they will take it to a tax deed auction. At the tax deed auction, that piece of property, the minimum bid will start at the amount that is owed to the tax lien investor and to the county, which the county gets like publishing fees or something like that, okay? Now, if in the situation that nobody bids on it, the tax lien holder actually becomes the owner of the piece of property. If somebody bids on it, $1 more, and nobody else bids against them, he pays $1 more than the opening bid, and the tax lien holders reimburse their money, plus, of course, the interest that they earn during their period of ownership. What he is asking is if he has a certificate worth $10,000 and somebody bids $15,000 on it, where does the extra $5,000 go? That's called surplus or excess proceeds, and that will go to any lien holders first, or any encumbrances, any mortgage holders, stuff like that. It'll go to them first, and then it will go to the property owner, as long as, of course, they file for it. We were actually discussing that a little bit earlier. But yeah, the tax lien holder does not get that overage in the state of Florida. Jay Cordy CrossFitter. I know I can't refinance the purchase at a sale, but can I just refinance the property after the fact to cash out? Okay, this is a question we actually answered already. Yes, if you buy a piece of property, provided there's no season requirements, you can refinance it and cash out. And again, something along that same line, the bank's going to require title insurance. So make sure, but if you have that plan to buy a piece of property at a tax sale and refinance to pull some cash out, to reinvest and start that kind of, I guess I kind of call it the snowball effect where you're growing your money. If you have that plan, make sure you factor in that you are going to have to get that title cleared off before the bank will allow you to pull that cash out if it's a tax deed. Pat Stevens, buy a property even if you can't look at it beforehand if it's only say $100. No. If there's nobody that sees that property, again, I would like to see it with my own two eyes. If I can't hire a realtor, a scout, an inspector, somebody I at least trust a little bit to lay eyes on that property beforehand, I'm not going to buy it. And the reason is there's a lot of junk at tax sales. So even if it's $100, what will happen is maybe that $100 property has a $500 tax bill. And then you or your company is stuck with that $500 tax bill. Maybe it comes with HOA or maybe it comes with water bills, or maybe there's all sorts of issues that could happen. So just because a piece of property is cheap, that does not mean you should buy it. If a piece of property is sold for $1, don't buy it unless you know what you're buying, okay? Let's see, I've got 3 more of the questions that were submitted. Riza Morales, I don't get it. A 30-year mortgage just disappears. So basically she's saying if there's a mortgage on a piece of property, on a tax defaulted piece of property, that gets wiped out. That's going to be junior to your tax foreclosure, okay? So that's going to get wiped out during that tax foreclosure. Now, that lien holder is going to get notice. And what will happen is most of the time, if there's a mortgage holder, they have any interest in the property, any equity in the property, what's any, I guess, equitable interest in the property. If they're owed money against that property, they're typically going to pay off those taxes and they're going to charge it right back to their borrower. So if a mortgage company is properly notified, they will typically not let it go to tax sale. I have seen it happen before where they were notified and it just gets lost in the system, but typically they will not let it go to tax sale. Sarah Jenkins, I went to my first auction a couple of weeks ago. I didn't bid on anything, but was very interested in one house. It went for too much, but when they started to sell it, I was so nervous. Any tips to overcome the fear of bidding? Laugh out loud. Sarah, that's a great point. It can get nerve-wracking. I still get butterflies to this day. I've been doing it for like 16 years now. I've been to, I don't even know how many auctions, right? But I've bid on so many properties, but I do still get nervous. I get a little tingle, right? And that's okay. I think it's, I kind of think it's excitement, but as you should be properly prepared, okay? Make sure that you know what you're doing, know exactly what you're buying. Make sure you're ready to bid, and you're not rushing yourself, that kind of stuff. Just make sure you're confident in what you're doing, and eventually those jitters, that nervousness that you call it, will turn into excitement. So hopefully that helped you out, Sarah. Just be confident in yourself. Brian Donaldson, I got, looks like one more question that popped up. Guys, so basically 2 more questions, guys. If you have any more questions, go ahead and pop them into the chat box for me. Because I'm going to be wrapping up in just a few more minutes. Brian Donaldson said on YouTube, what's the difference between this and bank-owned homes? Obviously, one didn't pay taxes and the other didn't pay the bank, but is it the same besides that? It can be similar, I guess you could say, from the outside looking in, but tax foreclosure basically is, there's a lot, I guess there's a lot more to it. Bank foreclosures, tax foreclosure, the county wants their back due taxes back and they want to return that property to the tax roll. That is like their main thing, right? That's them over here. They want the property back on the tax roll as a tax revenue producing property so they can meet their budgets and all that kind of stuff, okay? The bank, that's a private enterprise. They can really make the decision. If they want to sell it for X amount of dollars, they can sell it for X amount of dollars. The tax foreclosure system, the government has to follow state statutes on exactly how everything is done. When you're buying a bank foreclosure, they do stuff the way the bank wants to do it. You're essentially dealing with a private enterprise that does whatever they want to do. So keep that in mind when you're kind of comparing the two. I've got a couple more questions. Mark says, at what point in your auction sale process progress would you establish a company LLC? I would do it. It depends on the state you're in as far as the fees and stuff. I mean, it's not that much money, a couple $100 if you do it yourself, if you follow it yourself. So, if you are definitely going to invest in tax defaulted real estate, it doesn't really hurt to do it right now. I think actually last month I was telling those guys, if you're not going to not going to do it in December, wait till the first of the year. And the reason is every calendar year you usually have to file an annual report or something like that. So every year you will have some sort of filing fee. So, but now that we're in January, if you're going to invest this year, why not go ahead and start it right now? That way you have it ready. You don't want to buy a piece of property that you think you might have some liability on and then put it in your personal name and just let it sit there until you figure out what to do. So have that LLC ready to go, or S Corp, or whatever entity you want to use. That's kind of my opinion on it. The fees that, $100, $200, whatever it is, that's nominal in the scheme of things when it comes down to it. So let's see, Tess, Sifa. What's the highlight benefit from your coaching program? Well, I think you guys know I'm not the type to plug or anything like that, but since the question was asked, basically, guys, I've been in the business for 16 years, 1,000 plus properties, almost a dozen states. I've been doing it so long, guys. I've got over 400, almost 500 videos now on YouTube. So if you don't want the premium stuff, that's cool. That's awesome. Come join me every single month for Q&As because I love interacting with you guys, and watch the videos. I put out 4, 5, 6 videos every single week. As far as the Tax Sale Academy itself, that is broken down into 10 modules. It's step by step. It shows you all the ins and outs. It literally breaks it down. The process is just so detailed in how we break it down inside the academy. Then on top of that, depending on the plan you join at, we have weekly workshops where we will take, I have YouTube videos on here, for example, that I've got a topic. It might be like a 3 or 4 minute video. And people are like, wow, that's great. Well, guess what? In the academy, what I'll do is I'll take that 3 or 4 minute video and it'll be an hour, hour and a half, 2 hours long. We'll do workshops where we really dig into investing out of state. Somebody asked about that earlier. I did 2 workshops on that. I've got 2.5 hours worth of detailed information on exactly how to do that. So we take these little topics and we really dive into them deep. So the academy itself, we have weekly live workshops where you can ask Q&As, you can interact with me, all that good stuff. Anytime you have a question, I'm here to help you. And truthfully, people that watch me on YouTube, that kind of stuff, you can definitely get results if you apply it, if you apply that knowledge, if you take the time to learn what you're doing. But in the academy, it's a step-by-step process. And as long as you can follow some steps, you'll definitely see results in your business. So hopefully that helped. Hopefully I didn't get too salesy on you or anything like that. I'm not here for that, guys. I really don't. I'm not here to plug stuff nonstop. I mean, obviously, if you want to join the academy, that's awesome. I would love to have you there, and I would love to see you guys there. We have lots and lots of members that are seeing success because of it. But again, I'm not here to plug it. I've got so much free information that if you're not ready, watch my YouTube videos, my podcast, get my book. I mean, the book's be $5 for shipping. The book itself is free. Again, I lose money on this, but everything else makes up for the long run. So hopefully that's it. That's all the sales pitch, and that was only because somebody asked. So hopefully that test answered your question. Eddie says, is Jacksonville, Florida a good place to invest in tax loans? Yeah, actually it can be. I spoke to a student of mine, trying to think, probably 2-3 weeks ago, right around Christmas time. And he was investing. He was looking at Jacksonville, had some little bit of trouble with competition on the stuff that he wanted. So I kind of gave him some pointers and that kind of stuff. Look for the stuff that everybody's not interested in, basically, the vacant lands, maybe a little bit outside the counties surrounding Jacksonville. A lot of times people will focus on the big counties, the Jacksonvilles, the Orlandos, the Atlantas, all the counties like that, all the cities and the counties that are like that. And unfortunately, when you do that, you get lots of competition in those areas, but check the suburbs, check the outskirts, the cities that aren't quite as well known, and typically your competition is going to be less in those areas. But Jacksonville's a great market. It truly is right now. And Ben says, after signing up for the program, and if we have any questions during the buying and selling process, can we contact? Yeah, absolutely. That's part of the reason that I created the program. The member I was talking about back in, I guess it was November or so, Joan, the one that, I think she made $12,000, $13,000 off that lot that she had sold. She was one of the, we literally talked back and forth just about nonstop through the entire process because she's a little bit nervous and all the information was in the academy. So I would kind of just redirect her, hey, this is what you need to check out. This is what you need to do. And by the way, here's a few tips. So if you're buying, selling, anything like that, that's the reason I have the academy. I love doing these live streams with you guys. But the deal is I can't get on here every single day and answer every single question that I get. If you do post video questions below my videos, I do try to answer every single one of them if I do see it, but it might take me a day or two. If you're a member of the academy, it will literally come right. I was looking at my phone. I'm actually talking to my phone. If you're a member of the academy, it will come directly to my phone, and as soon as I sit down, I'll start typing it back. So that's kind of how it works. You get, you really get to interact with me on a close basis. And I'll give you my opinion on everything. I'm not, I'm not going to be exactly say this is exactly how you do it. You're going to see success, this, and this. But if you follow the proven system, the proven process, the steps, that kind of stuff, you will greatly increase your chance of success. So Ben, hopefully they answer your question. David, let's see. How true is it that one can be a bird dog and locate owners regarding their surplus money, which is a result of tax lien being sold at auction? I think we actually covered this a little bit. You're talking about like surplus funds, excess proceeds, that kind of stuff. You can make some money. It's something that I don't specifically do. I did it many years ago. I don't do it very often. Every now and then, if it falls in my lap, I'll do it. You can make money doing it, but it can be a difficult road. And I actually might do another video about this. I've done some videos, some with a few details, that kind of stuff, but it can be a difficult road. So just understand you have to track people down. You have to talk them, into who you are and why you should be involved and why they just don't go to the county directly, that kind of thing. And also some states have changed the laws lately where you have to, where you can only get X amount of dollars. It'd be capped at $50 or something like that, or, $10 or whatever it may be, to kind of prevent this type of stuff. And then also some states will require attorneys now. Some states require the owners or their attorneys do it themselves, and they don't allow a third party. There's all sorts of other ways you can get around those. There's loopholes to get around all that kind of stuff. I don't do it personally. You can make money doing it, but I'm so busy with buying and selling tax liens and tax deeds. Hopefully that helps you out. David, yeah, absolutely. You are absolutely welcome. Guys, I think that's all the questions I've got. I'm going to start wrapping it up. If you have any questions, punch it in like right now in the next 15 or 20 seconds, and I'll hopefully see it and I'll be able to answer it for you guys. So yeah, guys. But yeah, if you haven't picked up Tax Law Playbook yet, this is an awesome book. It's if you're looking to start investing, but you're not sure which way to go, that kind of stuff, what to do, how to start. You're not even sure if you wanted tax law, to be a tax law investor. This is going to be a great starting resource. It's a couple hundred pages. It's a very easy read. It's a very systematic book. It tells you a little bit about my story. It tells you a little bit how to get started, that kind of stuff. I mean, just by reading this book, you can get started. And again, the book itself is free. Help me cover shipping, $4.97 to get it from my warehouse to your front door. That's all that I ask. I mean, you're not going to find a book much cheaper anywhere else. And the deal is that, this is going to be a great resource, a great way to get started for you guys. If you want more information, obviously, YouTube, we post videos like every day now. Our Tax Sale Podcast at taxsalepodcast.com. Make sure you download it. Make sure you give us a good review, guys. That's a great resource as well. We have 2 episodes on there. Is Illinois good for tax lien investment? Eddie, yes, it absolutely can be, for sure. But yeah, guys, as far as if you want more advanced training, coaching, stuff like that, go over to taxsaleacademy.com, click on join. Also take our web class at taxsaleinvesting.com, or you can go to taxsaleacademy.com and just click on web class, and you can definitely learn quite a bit there as well. And Mark says, can you sign my book when you order it? Mark, if you order tonight or tomorrow, I will flag it. And I'll give you this book right here in my hand, as a matter of fact. I'll sign it for you, all right? And I'll get it dropped in the mail. I certainly will. Anybody else wants a signed copy, just send me an email, shoot me a message on YouTube. I'd be more than happy to sign it as well, guys. But listen, I enjoy so much these interactions I get to have with you guys. Tax law investing, I've been doing it for so long, and it's so exciting to me. I just get so pumped up when I start talking about it, and I love explaining it to other people, love helping other people. So if you have any questions whatsoever, always feel free to leave a question, leave your comment, whatever you might have underneath the video or wherever you might find us at. And also, guys, if you ever see our content anywhere, please sure to give us a thumbs up. Give us, on our podcast, 5 stars, that kind of stuff, because it really helps to continue to motivate me to produce this stuff for you. If I know you guys are enjoying it, I continue to produce more and more content to help you guys out. And got a few people said thanks. You guys are absolutely welcome. Mark, Virginia Farmer, all you guys, you are definitely welcome. Thank you so much for spending an hour of your evening with me, guys. I'll be respectful of your time. Go ahead and close out right now. And as always, if you have any questions, feel free to leave them at the videos, wherever you find us.